Hi there, welcome to this Money Control live stream. You're watching Morning Trade with me, Nandita Khemka. Well, over the next 30 minutes, we'll be talking about all the cues for trade, given the fact that the GIFT Nifty is hinting at a muted start for the Indian markets, but the Asian markets have taken a hit after the release of the FOMC minutes last night. So we will be decoding the minutes of the FOMC meeting that have come out with a global expert on the show. And of course, we'll also be getting you all the cues for trade, given the fact that it is a weekly FNO expiry today and lots of stocks to watch out for. So watch out for that over the next 30 minutes. And of course, we'll also be getting all your stock-related queries answered by our expert on the show. So send them in to us on our YouTube feed and we will have them addressed. But before we proceed further, let's take a look at the top headlines at this hour. Stocks correct on Wall Street as trading resumes after the Independence Day holiday. In fact, if you look at the Dow and Nasdaq, they ended lower in trade, and the FOMC minutes rather are hinting at more rate hikes and hint at a division within the Federal Reserve, over the future course of rate hikes. Aside of that, Asian markets edge lower on a weak handover from Wall Street, GIFT Nifty 2 indicating a muted start for the Indian market. Meanwhile, oil hits a two-week high with Brent surging past $76 as the market continues to assess the supply cuts announced by Saudi as well as Russia. And among the stocks in spotlight today, Marico's first quarter business update reflects weak growth as rural demand pickup remains elusive. Tata Power receives a smart metering order worth 1,700 crore rupees and a block deal is likely in Piramal Enterprises. Let's discuss the FOMC minutes in greater details. Then joining me is Peter Cardillo of Spartan Capital Securities. Great to have you on the show, Peter. First of all, the Fed minutes, of course, have hinted at a division within the US Federal Reserve over the number of rate hikes going forward. In fact, there was a division regarding the June pause as well. But of course, we saw a pause in the June policy meet after 10 consecutive rate hikes and a 5% increase in US interest rates. But right now the markets were expecting another 25 basis point in the July meeting. But of course, after the FOMC minutes and the kind of commentary that has been coming in from Fed members and Jerome Powell himself, how many more rate hikes would you be looking at now? Now that most of the members have hinted that more than one rate hike may be necessary to tame inflation going forward?
Well, according to the Fed's minutes, obviously they're looking at a few more rate hikes at a slower pace, obviously. But I think the Fed is committing a big mistake. The Fed was wrong on inflation, and now I think they're wrong on inflation again. The Fed was quite clear, as we saw in the minutes, that the core rate of inflation has come down, but not at a rate that clears the way for according to the Fed, clears the way for the pause to continue. So I dispute that, and I think that inflation obviously is high, but is coming in the right direction, and that means that if they raise rates one or more two times, I think that a more pronounced recession is on the horizon, as opposed to a tippet recession.
All right, a more pronounced recession, you say, Peter, but, given the fact that, all the data that have come out of the United States, it points to resilience in the economy at the current juncture. Would you still, what makes you think that, the US is headed for a hard landing now?
Well, the economy is basically split in half. There's a part of the economy that still is quite strong, and that is the consumer. But then if you look at the industrial sectors of the economy, they are already in recession. And so I think if you really weigh heavily on the consumer, once he pulls back, then it's going to be rather difficult to avoid a recession that could be steeper than we have been anticipating. So the question here is, what rate of core rate are they looking at? Excuse me. Certainly 2% core rate inflation is not in the cards, at least for another maybe year and a half or 2 years. So if you have the core rate of inflation slightly above 4% and you get it down to, let's say, 3.5%, 3.25%, I don't think there's any need to raise rates any further. And we've seen already the inflation data. In fact, we saw it last week in the PCI price index, which once again showed that inflation is going in the right direction, and the core rate itself.
Right. I also want to get in a question on the Indian markets, given the fact that, we've been hitting record highs consistently. And of course, a lot of foreign money continues to flow into India, given the fact that the China story hasn't really played out even after reopen. And a lot of money is flowing from China into India. But do you think Indian markets have become expensive when it comes to valuations, or would you say they are justified at the juncture and there could be more upside going forward?
Well, I mean, a lot depends on the earnings season, and of course, India has been quite strong, and India is looking at a solid comeback. In fact, it's probably one of the few nations that is likely to avoid a recession. But in terms of earnings, at least in the States, we are expecting that Q2 earnings are likely to come in within market expectations. And so even that maybe some of the valuations might be somewhat stretched, I think that in general, they do support the recent rally.
All right, Peter, with that, thanks a lot for taking out time and joining in. And we look forward to having you again on the show sometime. Thanks a lot for joining in.
Thank you for having me.
Well, with that, let's bring on board our technical expert for today. Osho Krishan of Angel One is joining in this morning. Good morning, Osho. Good to have you on the show. Of course, yesterday the bulls did take a breather with the Nifty, sort of ending below that 19,400 mark, just about flat. But there was a lot of volatility. And given the fact that today is the weekly FNO expiry, about of volatility is expected to continue in today's session. And GIFT Nifty, of course, hinting at a subdued start. But would you, say that, would you not see a lot of downside from the current levels? Where would you expect Nifty to take support in today's session?
Very good morning, Nandita. Thank you for having me in the show. Well, looking at the overall technical structure of Nifty, what we have seen from past 1 week that there has been an upside of approximately 650 points in Nifty. But from past 2 days, there has been some kind of tentative moves around the levels of 19,450 to 19,500. So considering the derivative data, 19,500 still holds the maximum call writing. That means 19,500 will be acting as a very strong resistance for Nifty. While looking at the overall scenario that we have witnessed from past 1 week, that FIIs have continuously accumulated or have bought their position in the future segment. So even if you will be seeing the long short ratio, so it has surged towards 72%, which is approximately near to the overbought region. So from here onwards, we can expect some kind of consolidation in the market. Level specific 19,300 will be the immediate support, while a strong support lies around the bullish gap of 19,250 odd levels, which is the bullish gap on technical charts. So we are expecting that any dip towards 19,300 should be acting as the immediate cushion for the market today. But by the day end, we might witness some kind of long unwinding as well. So we should not be very much aggressive in market today, because some kind of volatility can be seen after a strong up move from past 5 to 6 trading session. So therefore, the immediate range will be 19,300 to 19,450, while any breach below 19,250 can again subdue the movement towards 19,200. But for the day, 19,300 to 19,450 should be acting as the immediate zone.
All right, 19,300 to 19,450 should be the immediate zone to watch out for on the Nifty. But before I move on to other stocks and take some stock queries as well, I want to talk about Maruti Suzuki. Now, this stock, of course, it was a day of milestones for Maruti, given the fact that market cap hit 3 lakh crore mark. In fact, the stock also hit the 10,000 mark, albeit briefly, but it had made a high of 10,036 or thereabouts. And this morning, we have a brokerage call coming in on the stock. Morgan Stanley is overweight on the counter with the rating with a target price of somewhere around 11,164. In fact, of course, the company has launched Invicto, which is a multi-purpose vehicle at a price of 25 lakh rupees. So that's I think the most expensive car from Maruti stable. And Morgan Stanley believes that it will remain a low volume car for the company with the average selling price remaining on the higher side, and the mix and market share improvement keeps Morgan Stanley overweight on Maruti. So how would you advise investors to look at a Maruti? Do you think now is the time to get into the stock if one doesn't have exposure to this one?
See, overall technical setup for Maruti is very bullish because looking at the previous historical movement, Maruti has been in the higher highs, higher lows patterns on the technical and daily chart. So overall, the technical structure is very nice for investment purpose. Maruti has always been one of the favorite pick. But looking at the recent movement that we have witnessed yesterday, that it has seen a fresh long all-time high levels. So from here onwards, one can expect the rally to continue based on the speculation of the launch of new car. But again, that should be fizzled out in some of the odd days, like 1 to 2 days, we can witness some kind of follow-up buying. But after that, there could be some kind of consolidation or profit booking in the counter because 10,000 already has been tested. So the next immediate target or immediate resistance that we can see in Maruti is near to 10,200 to 10,250. So those levels one should consider to book their profits, while any dip towards 9,800 should be considered as a accumulation levels for Maruti in short-term perspective. But from overall view, the broader perspective looks very positive. So for investment perspective, one should definitely look to accumulate this counter and hold it for a better returns in medium term perspective.
All right, that's the call on Maruti. Then another stock that I want to talk about is HDFC Bank. Of course, we've seen a sharp run up on the stocks of HDFC and HDFC Bank following the merger. But yesterday, of course, both the counters were among the top losers and were weighing in on the Nifty Bank and Nifty as well. So we have a query coming in from Alexander as well on the HDFC Bank. He wants to know whether this is the right time to buy into HDFC Bank or wait for more dips to accumulate this counter. What would you say?
See, overall, we have seen a very strong breakout around the levels of 1670, 1680 odd levels. And from there onwards, the stock has rallied towards 1750 and again is retesting the neckline of the breakout. So any more correction towards 1600 levels will be seen as a buying opportunity in this counter because the upside rally has been very stellar and it's on a very vertical note. So some kind of correction should not be ruled out. But even on the downside, 1640 and 1620 is the immediate support zone for this counter. So any dip towards the support levels should be considered to accumulate for accumulation from short to medium term perspective.
All right. Hope that answers your query, and that's the call on HDFC Bank. Let's take a look at the stock of the day today. It's Marico. The company has come up with its first quarter business update. In fact, it expects June quarter revenue to drop amid rural stress, because the rural recovery hasn't really panned out as per expectations for the company. But it remains optimistic on the rural demand picture going forward. In fact, Q1 domestic volumes grew in low single digits for the counter, and consolidated revenue declined in low single digits in the quarter gone by. International business, however, has clocked in higher, a high single digit volume growth in constant currency terms. And gross margin is also expected to expand materially both QOQ and on a YY basis. If you look at the stock, I think, over the last 6 months or so, it's up somewhere around 5%. But, all these FMCG companies, a lot depends on how the El Nino situation pans out. But looking at the stock, it is still moving towards its 52-week highs. So, what are the kind of levels you'll be watching out for on this stock? And should one take position ahead of the first quarter earnings, or is it an avoid right now?
See, the counter is at the levels of resistance. 520, 540 is a very stiff resistance zone for this counter. but previously it has attempted to break out from the levels almost 4 times. But this time, that is in the month of May, it has given a decisive breakout with bullish gap upward movement. But looking again at the technical charts, it again entered in the same consolidation zone of 520, 540 levels. So these levels are very crucial for it because it has historically been tested as a very strong resistance zone. So one should wait for it to cross the levels of 550. If it crosses on a decisive manner 550 zone, then from there onwards, one can witness a strong rebound in this counter and it will be entered in a bullish trajectory again. So one should definitely keep a radar on this counter, but above 550 on closing basis.
All right, that's the call on Marico then. Let's take up a query on IRCTC. Sandeep Sagar has written in and he wants to know your thoughts on this counter. Railway stocks have, the rally in the railway stocks have literally fizzled out. In fact, if we look at IRCTC over the last 1 month, it is down somewhere around 2% or thereabouts. Would you advise him to look at it right now, IRCTC?
See, as of now, there has been no strong momentum in this counter, but obviously one can see that the stock has rebounded from the lows of 560 odd levels, which has historically been also one of the strongest support. But from here onwards, 630 to 560 is still a very strong gap on the downside. So one should try to avoid this counter for the current period and accumulate it only above the levels of 680 or on the downside of nearly 540 to 550 zone. Till that time, it's better to stay sidelines from the counter and wait for some kind of a strong recovery in the coming period.
All right, that's the view then. Let's take up a query on DLF. This stock was quite active in yesterday's session, ended near the high point of the day, around 3% up or thereabouts. We have a query coming in from Tariq Ahmed and wants to know your thoughts. Would you expect the counter, in fact, it's literally knocking at its 52-week highs. Would you expect levels of 550 or thereabouts over the next couple of weeks?
Well, looking at the overall technical setup, yes, the counter is looking very aggressive. But this has been a stellar bull run because obviously we can see that there has been a vertical move from the levels of 350 towards 500 odd levels. So one should definitely wait for some kind of price-wise correction in this counter. If it happens, then one should try to accumulate it near the levels of 480. Else, one should look for the fresh breakout around the levels of 510 and then try to enter in the counter at a higher level.
All right, that's the call. Let's then talk about Piramal Enterprises. There's a big block deal expected in the counter today. In fact, somewhere around 60 lakh shares worth of a block deal is expected. In fact, an FI investor is likely to exit or sell some of its holdings, and the block deal price is likely to be at a 2% discount to current price. How would you play or look at a Piramal Enterprise, particularly for today? Given the fact that there will be a lot of action in the stock in the wake of the block deal that is going to take place.
See, overall, it's on a very positive movement, so one can expect the positive movement to continue. But obviously, the cream movement has been moved out in this counter because it was at the levels of 800, where one should definitely try to look at this counter. But as of now, any dip towards 920, say 900 zone should be acting as the strong support. While on the higher end, any breakout, that is the breakout above the levels of 960, can witness a kind of a flag pattern breakout in this counter. So for that, the target will be approximately 100 points. So 1050 to 1060 will be the target from medium term perspective. But if it will happen only on a decisive breach above the 960 zone. So today there can be some kind of volatility, but one should wait either it to close above 960 levels, or if it comes down towards 920 to 900 levels, then one should try to accumulate this counter.
All right, that's the view on Piramal Enterprises. Let's also talk about JSW Steel. This stock will be replacing HDFC on the Nifty from the 13th of this month. Looking at the stock, it was pretty much muted yesterday, but over the last 5 sessions has gained a good 4% or thereabouts. But do you think this bit of news will have a positive rub-off on the stock today?
See, these kind of news will already factored in the previous movement, because we have seen a strong rally of approximately from the levels of 750 to 800 levels, where all the other metal sectors were not that aggressive in their pace. So JSW has already seen that kind of movement in the recent period. But yes, as per the news, there can be some kind of volatility. But on the higher levels, one should definitely look for the counter to close above 800 levels. Then only the continuation can be seen on the higher end. Else the counter can see some kind of consolidation in the narrow zone of 780 to 800. And once it breaches this level, then 20 points of upside or downside can be seen in the coming future. So one should try to accumulate it only above the closer of 800 levels for the immediate target of 820.
All right, that's the call there. But since we're talking about the metal sector, we have a query coming in from Amrut and wants to know your thoughts on Vidanta. But this stock hasn't really done much over the last month or so. How would you look at this counter now in the metals pack?
This is one of the most laggard counter from the metal space. There has been no movement literally from 1 month. The counter has been in a very strong, slender zone of, let's say, 5 to 8 points. So one should definitely, but overall, looking at the technical setup, it is on the verge of a breakout, or it can be seen that it is hovering near the resistance zone. So any breakout from the levels of 285 can see a very positive traction in this counter. But meanwhile, as there is no such strong movement in this counter, so one should stay sidelines and wait for the levels to come. Once if those levels 285 will come, then only one should try to enter in this counter. While on the downside, a strong support is placed around the levels of 270. So 270 to 285 will be the immediate zone, which will be no trade zone literally for any short-term traders. Above 285, one should try to accumulate. Below 270, one should try to short sell their positions.
All right, that's the call then. I want to get in a couple of queries on the mid-cap PSU banking pack. Some queries coming in on Canara Bank as well as Union Bank. Kishore wants to know your thoughts on Canara Bank, and Satya CK wants to know whether it's a good time to enter. So a lot of these, PSU banking names are doing extremely well. In fact, the PSU banking index has also been on a tear in the last few sessions. The quarterly updates are pretty upbeat, even though there are concerns over margins as deposits get repriced. But how would you play these, some of these mid-cap PSU banks ahead of the quarterly earnings now?
See, Can Bank is looking very positive, but it is hovering near the resistance zone of 326. So 326 will be acting as a very strong hurdle. Once it crosses 326, then only we can see some kind of traction in this counter. But on the downside, 308 is the immediate support zone for Can Bank. So one should definitely try to look for buy on dip strategy for Can Bank. Any dip towards 305, 310 should be seen as an accumulation zone for Can Bank. And on the higher side, 326 will be the immediate target. Once it breaches 326, then from there onwards, we can witness a strong rally in this counter of almost 40 to 50 points from short to medium term perspective.
All right. I think let's take up a query on Raymond then. Debu K wants to know your thoughts on this stock. Raymond has done fairly well over the last 5 sessions. It's up somewhere around 3% or thereabouts. So the last 1 month up 8%. Should one take positions in it right now, given the fact that it is heading towards, in fact, it did hit a 52-week high in yesterday's session itself?
Yes, looking at the overall technical setup, the counter is looking very aggressive and having a very strong technical pattern on daily chart. So one can definitely try to accumulate this counter even at the current levels. For the higher end, one can expect the target of 1820 on immediate basis, followed by 1900 zone from short-term perspective, while on the downside, a strong support is placed around the levels of 1640 levels. So 100 downside is there, strict support is there, and 100, so risk and reward for this counter will remains at 1:1. So one should try to have that aggressive approach only if they can sustain such kind of movement from short-term perspective. But from medium-term perspective, yes, one should definitely try to accumulate this counter.
All right, one should try to accumulate this counter. One last query, and very quickly, Vivek Kurup wants to know your target on persistent for the next 1 to 2 weeks.
Persistent, correct? See, persistent, the mid-cap IT has not been performing well in the current period. But overall, if we will be seeing that the sloping trend line or the sloping channel will be given a breakout around the levels of 49.50 zone. So any breach above 49.50 can give a thumbs up in this counter towards the immediate highs of 52.80, 5300 zone. But as of now, one should better wait for those levels to come and then only try to accumulate this counter. Else, one can even try to accumulate at the lower levels of 46.80, 4700 levels.
All right, hope that answers your query. With that, we've come to the end of the query segment. But before I let you go, Osho, leave us with some stock recommendations for our viewers.
There are two buy setups on the technical chart that I can suggest for the viewers for positional short-term perspective, let's say 1 to 2 trading session. The first one is Escorts. Escorts have seen a sloping trend line breakout in the last week. It has retested the slope line and again have started moving on the higher end. So one should try to accumulate Escorts near 2250 to 2260 zone. On the downside, 2200 will be acting as a strong support zone. So one should keep a strong stop loss around 2200 levels. On the higher end, 2364 will be the target that one can expect in Escorts. The other one is from FMCG space. Godrej CP is looking very positive. So Godrej CP even yesterday has given a breakout from on the daily chart. So Godrej CP one can try to accumulate around the levels of 1085 to 90. On the downside, 1060 is acting as a very strong support zone. So one should keep a stop loss of 1060. And on the higher end, 1140 will be the target that one can expect in the coming 1 to 2 days.
All right, buy calls on Escorts and Godrej consumers. Well, with that, Osho, thanks a lot for taking out time and joining us this morning and, of course, addressing all our stock-related queries as well. Well, with that, we're completely timed out on this edition of Morning Trade. But, of course, thanks a lot for watching from me as well as the entire team that put the show together. But, of course, stay tuned because coming up next is Opening Bell.